would be weak. Let's get the heat map up on the screen and show you what's moving and what's not. So even Stevens, if you will, autos is soft today. Mahindra and Mahindra leads this down tick, but Hero MotoCorp not far behind. Tata Motors is a bit soft as well in the session today. So autos have taken a bit of a pull back in trade. Some PSUs are doing okay. Power Grid, Coal India. Some of the energy-related stocks not doing too bad at the broader end of the spectrum, by the way. I mean, I'm sure Hersh will mark the Ceylon Explorations, HOECs of the world. Oil upstream has done really well for itself in trade today. Not showing in the way ONGC is moved, but certainly the broader end of the spectrum has seen that. Adani Enterprises up 1%. And I think both Adani Energy Solutions QIP as well as the numbers from Adani Ports probably helping the sentiment on that group stocks as well, because Adani Energy Solutions is really hitting it out of the park in the session today. Just before I give it to Harsh, if we can pull up Adani Energy Solutions on the screen, post the successful completion of the QIP, look at the price movement on that stock in the session today. It gained a little bit yesterday as well. Today, Adani Energy is up 11% at 1271. So packing up on. Standard disclaimer, of course, Adani Group owns NDTV Profit as well. Harsh, good afternoon. Not quite as good at the broader end of the spectrum.
Not at all, Niraj. We're down around 1% on the mid cap, and the breadth of the market clearly reflective that the broader markets are in pain. We can see that, and midway through the day, we somewhere reversed that, and you can see the mouth is wide open with the reds firmly in control. But let's talk about a few stocks in focus at least today to start off. Results. So we've got a ton of them coming, and we've got plenty of buzzers. Let's pull up something like a Zaggle, which is up 7% now. Nearly 8% in fact was up in trade. That positivity continuing from yesterday. Of course, results came in day before yesterday. You have Aster DM, very strong margin improvement, 200 bips or so, and that stock is up and away. Puravankara also was up, has cooled off now, just about up just about 1/3% thereabouts. Before I move on, if you can pull up Z as well, that stock was flying away in trade yesterday. Today down roughly 5% or thereabouts, Z Entertainment. So keep your eye out on that one, because very strong set of numbers yesterday. Good reaction on the stock as well, but down 4.5% in trade today. Among others, let me pull up some of the other negatives. Thomas Cook down 10. You have Sonata Software again soft on the top line. Margins also no good, down 8.5% odd. Teamlease, the margin contraction has been sharp from almost 1% down to 0.3%. Clearly, the street not happy about that. 6% down Teamlease. This was a stock which was in focus on budget day, mind you, and continues to be in focus now. Let's pull up something like a Ugro Capital. ROA contraction, street clearly unhappy, 4.5% lower. Growth continues to remain strong, but that doesn't cut out for investors. Reddington 2, the margin shrink has been sharp from 2 to 1.7. That's a sharp shrink for something like a Reddington, down almost 5% or thereabouts. Prestige Estates again down 3% as well. So those were some of the stocks. Let's talk about some oil upstream stocks as well. HOEC, we also spoke about Ceylon. Let's pull those two up, see where they are lying in trade. There you go, 2.5% higher on HOEC. Ceylon Oil, if we can pull that one up as well, likely in the green and well in the green in trade. There you go, 20% higher on Ceylon Exploration. So some of those stocks buzzing as well. Over to you, Niraj.
Thanks, Harsh. Well, let's get in our experts to try and understand what to do in a scenario like this. Kush Bora and Rajesh Palvia, both of them on the derivatives and the technical side. In a bit, of course, we will get in Devin Choksi on the fundamentals. Gentlemen, thanks so much for joining in, both of you. Really appreciate your time. Kush, how are you approaching the index today, or is the index a no-go zone and rather focus on stocks?
Hi, Niraj. Hi, Rajesh. Well, Nifty is quite interesting, isn't it? I mean, we've been cautious, but it's been moving up. So, why not play the trend as long as it lasts? So on the Nifty, whenever you get a dip closer to support zones, you could go out and buy. The most immediate support zone on the Nifty is coming at 24,800, a little below is at 24,600 zones. So anywhere closer to support, you might buy. But this is also a market where you want to take some money off the table because you're seeing some pressure at a slightly higher level. So you'd want to trade Nifty, as they say, each day as it comes. So that's the kind of view you take on the Nifty as of now. Bank Nifty, on the other hand, is quite clear. It's in a bit of a downturn, if you can call just a bit of it. The levels are also very clear. The 50-day moving average is at 51,000 and the 20-day moving average is at 52,000. For now, it's respecting that range, but the bias here is very clearly negative. So if I were to take a short trade, Bank Nifty is where I would take one. 52,000, maybe a little higher, should be your stop loss. On the downside, you're looking at a 50,800 rather, and a 50,500 as the second target. So Bank Nifty is a short. Nifty, respect the trend, keep buying the dips, but also keep taking profits off the table, at higher levels.
Rajesh, is this a dip that you would buy into the Nifty? And of course, parallelly, the Bank Nifty, which continues to see that pressure at that 52,000 mark every single time it tries to eclipse it.
So good afternoon, Niraj. Good afternoon, everyone.
Very good afternoon.
Today is the weekly expiry day for the Nifty, or weekly option expiry day. And looking at the data, 25,000 is the critical for the Nifty at this juncture. But overall trend is set for further move further higher. Maybe we may consolidate for another 1 or 2 days, and then possibly we may see a breakout about 25,000, and then possible really can extend. So yes, we will be waiting for this dip to around 24,900. That is the risk to reward would be favorable if it comes to 24,900, where we can deploy some long trade in the Nifty with stop loss of 24,850. The crucial support for the Nifty is now placed at 24,800 for near-term trader. So I think till these levels are intact, I think buy on dip should be your strategy. But for today, 25,000 would be the level where Nifty will try to expire for weekly option. So I think around 25,000 plus minus 20 point would be the expiry which we are expecting for 2 days.
All right, Rajesh, let me stick with you. Your picks for this afternoon.
Yeah, Hersh. So first stock is from power space, that is Tata Power. Very fresh breakout after a long consolidation in Tata Power. Long built up is there in derivative data also. Looking at the overall structure, we believe that Tata Power has potential to continue furthermore upside from here onward. It's a long breakout. So we are projecting target towards 480 with stop loss of 455. The second stock is from insurance space, that is HDFC Life. Looking at the structure for HDFC Life, now stock is approaching to its December 23 swing high, and the way most of the insurance space have done well in last couple of days. So I think HDFC Life is a possible target for HDFC Life. We can see towards 740 to 745. One can buy with stop loss of 704.
All right, Kush, let me take it across to you. Your picks for this afternoon.
Sure, Harsh. Before that, if I can just give a quick update on a couple of calls that we discussed yesterday. KFin Technologies was the morning call that we had yesterday. Second target of 880 was quite convincingly, quite easily surpassed. One of the biggest winners of the day. Almost 900 it had hit. Even now it's holding above that, 870, close to that 880 mark. My suggestion now is that if anyone got this, at least, basis the discussions that, we've had, it's not a bad idea to book out and, step aside. Again, it'll be a buy on dips, but at the moment, it's a good idea to perhaps, take the chips off the table. HFCL was another stock that we had discussed, slightly muted yesterday. Didn't really hit the stop loss, but a little soft bounced today. Came close to that 141 target. Again, we are seeing some profit booking. So here my suggestion, if anyone's got it, continue to hold, but keep your buying price as your stop loss. If not, then 130, 131 is the zone that you want to still keep as your sixth stop loss. So that's the update on KFin Tech and HFCL. For today, very similar pick in the sense from the similar space, which is CESC, as Rajesh already mentioned, Tata Power. CESC, this stock's actually been doing rather well. We've seen a bump up, in the price action in the last 3 sessions. And there was a brief period of consolidation before that. Today, we are seeing a bump up, along with the volumes. So I think this momentum could take it to 186, 191 in the near term. 175 strong support zone. The 20-day moving average resides close to that. So you place your stop losses thereabout. Given the cautious view on Bank Nifty, RBL Bank is a short. You could consider a short sell on, via the August futures. but keep a very strict stop loss. Here your targets will be 225 and 219. 237 is where you keep your stop loss.
Okay, so those are some ideas for sure. Keep an eye out for some of those oil upstream names as well. Actually, just before I get to our analysts, Rajesh, one quick thought on the oil upstream names: ONGC, Oil India, and maybe the smaller ones, HOEC, Ceylon, all of them doing very well. Is there a trade here?
So definitely, Niraj, yes, there is a trade in ONGC as well as in oil. Both stocks are Oil India. Both stocks are looking bullish. The way ONGC is, continuously holding about to its long-term breakout on a monthly as well as on the weekly chart, we believe that this stock has potential to continue furthermore upside. In the derivative data, there is a long built-up sign, series on series, and looking at the positional structure of this stock, we believe that this stock can continue towards 370 to 380 also on a positional perspective. So I think one can hold on the position on the long side for ONGC. Even in minor decline, one can add further with stop loss of 320. And for Oil India, stock is now negotiating with its previous swing high on a weekly as well as on the daily chart. So we believe that once Oil India manages to cross above 610, then there is a possibility that again Oil India may scale to the new all-time high trajectory very soon. So here also one can deploy some long trade with stop loss of 580.
All right. Thank you, gentlemen. Let me go across to both our analysts. We have two analysts, with us today. Varsha, Mahima. We are right in the thick of earnings. In fact, let me go across to Varsha first. Varsha, Sun Pharma. Talk us through what the Q1 numbers are looking like and what's broadly looking good.
Well, Hersh, so Sun Pharma did beat EBITDA margin and net profit estimates, but there's a reason behind that. Let's look at that. First is revenue was up 6% versus Street was expecting 8% revenue. Now, this revenue growth is on the back of India formulation sales, which was up 16.4% versus Street was expecting around 10% growth for the same. If you see the US formulation sales, it was down 1%, whereas this was expected to give good growth on the back of Revlimid and other launches. Global specialty sales, if you see, was up 14.7%. Now, coming to margins, if you see the EBITDA margins is at 28.9% versus 27% last year. Company did beat on EBITDA margin. It was expected around 26%. Now, this is because the R&D expense, which was expected at 10% of revenue, was actually at 6.3% of revenue. This is the reason we are seeing uptick in that EBITDA margin. Also, net profit, if you see, is up almost 40% versus Street was expecting almost 30 to 31% uptick in net profit. It did beat estimates. Now, this is on the back of two things. One is the other income has more than doubled, and also there was exceptional item last year of around 322 crore versus no exceptional item this year. This is the reason we are seeing this uptick in net profit. Lastly, if you see few things that investors should watch out. One is on the regulatory issues at Mohali and Dadra facility, updates on potential launch pipeline over the next 12 to 18 months, and also the R&D spend that company is going to make in FY25 and 26.
All right, Mahima, let me take it across to you. So, Varsha, thanks for that, Sun Pharma. But Mahima, with regard to Dabur India, we'll have the management later on the channel today. Talk us through what the numbers were like, steady set by the looks of it.
Absolutely. So steady set and largely in line with the Bloomberg estimates that we had in the morning today. Well, just to give you a brief idea of how the numbers have panned out, revenue is up around 7%, EBITDA is up around 8%. Margins have remained largely same as compared to Q1 FY24, and net profit is up 8%. The management had guided that the net profit will outpace growth in revenues, and that has happened. Now, a couple of key highlights that we've picked up from the results. Well, the food business saw a growth of 5%. Consumer care business saw a growth of around 7%, which is good for Dabur. However, inventory turnover has increased, and total debt, something which was positive was that total debt to asset ratio has decreased from 8.4% to that 7.6% mark. Overall, the management in their business update had said that they're seeing sequential improvement in demand trends in the rural area, and they've also said that volumes for India business will be in high single digit. We're yet to get the press release, so we'll get the exact number once the press release comes out, and the international business is expected to post a strong growth in terms of constant currency. But again, we'll have the number once we have the press release.
Yeah, let me help you with that, Mahima. In fact, the press release is just through, and we have the FMCG business, which has posted a volume growth of 5.2% for Q1 FY25. But thank you so much, both of you, for taking us through those numbers. 1.5% higher on Dabur India, looks like a very steady set. But let's take it across to charts. Kush, tell us, wager a trade on Dabur India, of course, from a fundamental perspective. Wager a trade on the rural play.
Well, this seems sort of come into the flavor, with the budget, but then not many of them have stuck around. We've seen a round of profit booking in a lot of these names. While Dabur, does have a slight edge, as in that, it's not broken key support zones. Very beautifully, it has respected the 20-day moving average for the last 5-7 sessions and, keeps moving higher. My concern is the lack of momentum, that there is, plus the resistance level of 650. So I wouldn't recommend a fresh trade just yet. Maybe above 650, we'll consider once again, once it crosses that. But if you've got an existing position, I don't think there's any harm in holding this. The support zone for this one is close to 635. Again, that is where the 20-day moving average resides.
All right. Thank you. What we'll do is we'll slip into a very quick break. On the other side, we'll delve deeper into today's market movement and action. Plenty happening in today's market. Stay tuned. We'll see you on the other side.
Bit of a wobble, must say, for the markets at large. By the way, Coal India July production numbers are out, 2.5% uptick. It's just incidental that we'll be getting Mihika in just moments from now to talk about Coal India, because it's also one of the prominent gainers amongst the large cap names. Like we said, Power Grid, Coal India, that whole energy related bucket, whether it's electricity, oil, coal, or just supply, I think that whole energy related bucket has done reasonably okay. Before the break, I'd asked Rajesh Palvia about the oil upstream names. Okay, some numbers on your screen. Adani Enterprises, and that's a blowout set of numbers based on what was estimated. As per the Bloomberg consensus, 1164 was the estimate. The net profit has come in at 1772. Remember, this is just the first flash that I'm reading. Let's just wait to see if this is operational in nature or they're one-offs. But the initial flash that has come in on the Adani Enterprises numbers seems to be very, very positive. I wonder if the stock is taking a bit of a leg up there. 2.5% up, 3245. But yes, certainly doing okay for itself on the basis of this net profit numbers. Now we'll wait for the other details, as I said. But between both Coal India and Adani Enterprises, there is momentum in those two large cap names. Standard disclaimers, of course, on your screen. Only the net profit number right now. Remember, the net profit has come in versus the estimate of 1164. The actual number was, I think, maybe less than 700 or thereabouts. So I think the numbers are looking very, very robust on the bottom line front for sure. The revenue numbers, there is an uptick for sure. I would reckon, Hersh, that this is a lot of it is operational, but are there one-offs? Do you have any data?
Yeah, so I've just pulled it out, Niraj. We've got the revenue number for Q1 coming in at 25,472 crore. That it's a growth year on year of roughly 10% thereabouts. That's what the number seems to suggest. Broadly, you're seeing operational efficiency play out. So EBITDA has gone up higher than that, likely to be in the teens. We'll just wait while those numbers are being crunched at the back end. And profit after tax, of course, extremely strong, 1776 crore versus the 678 crore number same time last year. So extremely strong on PAT. Material costs have declined, in fact, materially when I'm looking at it year on year as well as sequentially. And likely that will have an impact on EBITDA is the initial sense I'm getting. But we'll wait for more data as it starts to trickle through. But while we are at it...
There are some announcements, Harsh. Sorry, just before we go on to the other things. I think there is a scheme of arrangement. The board has approved some schemes of arrangement between various group companies amongst Adani Enterprises and Adani Wilmar and the respective shareholders, provided for the transfer or investing of the demerged undertaking, which is primarily includes the pertaining the food FMCG business, with all the associated activities and strategic investments in Adani Commodities from the demerged entity to the resulting entity on a going concern basis. And so there is a scheme of arrangement out there as well. This requires some deeper understanding, of course. On the face of it, there is a scheme of arrangement. There is also a scheme of arrangement between Adani Green Technology Limited and Adani Emerging Business Private Limited and Adani Enterprises, as well as Tradecom and New Industries and the respective shareholders. So there are a lot of developments that have happened. I think we'll need some greater detailing out here. But maybe just a trade view initially from our guest. Kush, you want to come in on Adani Enterprises as well as Coal India?
So, Niraj, as far as Adani Enterprises goes, the last 5 sessions have seen a very sharp run-up already. I think from a near-term trading perspective, this trade is done because the resistance comes in somewhere close to 3330, 3350 kind of zone. So the upside in that sense is rather limited. But if you've got it on, let's say, an investment basis, then you could continue to hold because the stock's gained quite a bit of momentum. So near term, it's not a bad idea to continue holding till 3350. Medium term, continue to hold. Targets are higher. No fresh entries for a near term trade. Coal India, on the other hand, has seen a very steady run today, up on back of very good volumes. I think this momentum can continue. Fresh entry can be considered. I think on the upside, you're looking at anywhere from 550 to about 565 kind of levels as the next target, and the stop loss here is at 525, 530 kind of level. So anywhere between that is where you can place your stop loss.
Okay. So that's the technical view out there. The stock is cooled off now, but the scheme of arrangement is the more interesting one. 37% uptick in EBITDA as well, so that's not too bad either. 3768 versus 2753, and the demerger of the FMCG and the food business. So Harsh, I reckon that business, the food and foods business from Enterprises, getting demerged into Adani Wilmar.
Correct. I believe that they're consolidating businesses. As businesses mature, they are spinning it out into the relevant listed subsidiary, and that's what they seem to have done, at least in this quarter. They've basically spun out one of the businesses and handed it over to Adani Wilmar, is what it seems like. Of course, there is another composite arrangement as well. So there are two arrangements. And on the second arrangement, there are going to be two companies which are going to be amalgamated. One is Adani Green Tech and Adani Emerging Businesses. Both of these with Adani Enterprises basically both of these are going to be amalgamated into Adani Enterprises, as well as Adani Tradecom and Adani New Industries are also two of the other parties which are involved in this particular arrangement. So there are two composite arrangements which are happening within this group as well. So we'll of course try and delve more into detail with regard to what's happening on this front. But before that, let's focus in on numbers. Well, margins have gotten sharply better from 12.8 to 14.4. So clearly there is an improvement when it comes to the numbers. But let me go across to Anushi, who's standing by with regard to the Q1 numbers of Adani Enterprises. Anushi, take it away.
Right. So now if you have to look at Adani Enterprises, the revenue growth comes at about 12.5%. Now this was led by the mining services segment, which saw about a 45% growth. Again, new energy ecosystem continued on a strong path over 132% growth, while it's the integrated resource management, which contributes about 34%, was down. But if you look at the EBITDA side, this is where we are seeing a main growth coming in from 37% at about 3,768 crore, while the margins have inched up from 12.2% to 14.8%. So as a mix of this, we are seeing the net profit also going about 161% over here at 1,772 crore versus 677. Again, foreign exchange loss was about 228 crore. Which was now 62 crore. So even that has come down. So again, this is what we are seeing on Adani Enterprises.
Okay. Anushi, thanks a lot for that. I think more than the numbers, though, this arrangement is interesting. There is an arrangement amongst Adani Green and Adani Emerging Businesses and Adani Enterprises, as well as Hersh said, Adani Tradecom and Adani New Industries. So amalgamation of 1 and 2, which is Adani Green Tech and Adani Emerging Businesses with Adani Enterprises, and amalgamation of the other two as well, I presume, with Adani Enterprises. So it's fairly detailed. I think we'll get to that. Devin Choksi should be with us any moments from now, and we'll ask him about all of these energy-related businesses. Rajesh, so the other one that we've kind of not spoken about is Power Grid, which is amongst the best performing stocks on the index today. How does that look on the charts?
So, Niraj, power and energy related stocks are doing good, especially in last couple of days. We have seen a very strong buying action in most of these stocks. Power Grid is continuously moving in uptrend. The way stock is moving in upsloping channel on weekly chart, that clearly shows that there is a sustained buying action is taking place in this stock. We believe that this upward momentum is likely to continue further, and possible target for Power Grid we can see towards 375 to 380 on a positional perspective. So I think any minor dip should be used as a buying opportunity in this stock until the stock not breaks below 345 level. I think buy on dip should be the strategy in this stock.
All right, buy on dips the strategy on this one. Rajesh, we've not asked you on Dabur India. If you can quickly give us your views with regard to that one.
So I think there is some volatility on an intraday perspective, but if you analyze on the short-term perspective, stock is in upward trend, though there is some consolidation. But we believe that the way stock has moved up in last couple of weeks, there is a possibility that this stock can again resume its uptrend, and possible target towards 665 to 670 would be there in a positional perspective. So I think one can buy this stock with stop loss of 628.
All right. Let's quickly slip into a very short break. On the other side, we'll get you the management of Dabur India. Stay tuned. Right, among all the FMCG as well as Adani Group stocks in focus, we also have some auto stocks in focus. Let's pull up something like an M&M, Maruti, see what they're doing. We're half an hour from close in terms of trade. 0.8% lower. Well, M&M down 2.7%, and Maruti, if we can quickly pull that up, 1.8% higher. Let's quickly ask our experts with regard to charts how a couple of these as well as auto stocks are looking. Kush, let me come to you on this one. Auto stocks in focus, what should one do at this point? Plenty of positives, at least from the numbers of Maruti.
So, Harsh, the surprising bit is that, the highs that it had made, the stock wasn't really able to hold those off. Now, on its way up, 13,000, 13,200 were the levels that, it had taken a very long time to cross convincingly. And today we are, quite comfortably above those levels. But, I'd still give it a day. We might have this closing, above that resistance band purely because of the number effect. But then, doesn't really comfort me that, we've come off so sharply. So till the time 13,000, 13,200 is held, you could continue to hold your long position. But I wouldn't recommend, making any fresh ones just yet.
Got it. All right. Let's quickly go across. We have Ankush Jain, CFO Dabur India, joining us on the phone line. Dabur India stock up 1.5% after what can be said is a very, very steady set of numbers. Ankush, just with regard to volume versus value, just take us through what has been the contributing factors of this performance for Q1 and how does Q2 and Q3 look as a result of this?
Good afternoon, everybody, and thanks for having me here. First of all, in short context of the numbers, our top line has grown by 7%, and in fact, in constant currency, we're almost 9.8%. And India also grew by 7%. Our operating margins grew by 8.3%, which is slightly higher than top line, and PAT also around 8%. The broad set of numbers. This was quite broad-based, with international geographies also growing high teens in constant currency. Now, coming back to your specific query on volume versus value, our volumes have grown by 5.2% in India and value by almost 7%. So clearly, there is a 2% odd price increase. Now, this volume, we are seeing definitely a sequential improvement from quarter on quarter. And I think it's also driven by both urban and rural. In fact, our rural growth has been almost 350 bits higher than urban, which is also an indication from a syndicated data where also, the rural is slightly higher, which augurs well for us as an organization.
Understood. From what I see, broadly, food and bev, the growth has been just 4% when I'm looking at it year over year. Traditionally, Ankush, food and bev has grown extremely well for you, especially when I'm looking at last quarter, year before. When I'm looking at those numbers, very strong. Talk to us about what's happened in this segment specifically.
Yeah. First of all, let me dissect foods and beverages. Beverages has grown by 3%, but foods, or the masala range, etc., has grown by 20-odd%. So, if you see only this quarter, it is 4%, but if you see a CAGR of roughly, pre-COVID to now, it has grown by 11 to 12%, double-digit CAGR over the last 5-6 years period. So, yeah, it has grown by 30% also last to last year, so it's also basis. But what had happened, specifically in this quarter, the consumers, in fact, because of harsh summers, they did not step out as much, and they needed immediate thirst-quenching, drinks or CSD is the word, which they moved to immediate hydration rather than focusing on more juice-based and health-based nutritional products. So I think that was because of some bit of, weather conditions. Secondly, what has happened, the CSD category or the Cokes and the Coca-Cola category has reduced its prices because of internal price wars significantly. so which also impacted and increased a relative price index of ours versus the CSD category. So I think these were the two broad reasons. But having said that, we continue to gain almost 330 bips market share in even in beverages category. So I think we grew ahead of the category much more than our peers in this.
Got it. Ankush, my last question is only on demand before I move on. Rural green shoots are now translating for you. Talk to us about sustainability of rural now, because that will come to the fore.
No, I think there's definitely green shoots, and this is the second consecutive quarter where the rural has outpaced urban, both for Dabur and for industry as a whole. And in fact, it's a sequential improvement. So this quarter, on a syndicated data, rural has increased by 250 bps more than urban, which was 200 bps higher in previous quarter. So sequentially, there's an improvement. Even for us, our growth is 350 bps higher than urban, which augurs very well for us. And I think the government initiatives which are being taken, in terms of increased capital outlay, increased rural spending, more infrastructure development, it is having a multiplier impact. And as we have been saying in the past, there is only some time lag before it results into actual growth. We are seeing those green shoots across, and I think this should sustain for even better in H2 as well.
All right, Ankush, material costs have supported you this quarter. You've offset that pretty much entirely with a higher A&P spend. Is A&P going to be elevated for the rest of this year? Just take us through the strategy. What's the thought process like?
Yeah. So I think our strategy is pretty clear. The gross margins upside, whether it's through deflation or through price increases or through value engineering, a significant part of it, we will be redeploying it back to generate demand. Because as you know, there are multiple categories. We are launching new products. We are launching, entering new segments, new markets as well. So we will be reinvesting, but a part of the gross margin expansion will definitely be flowing back into the operating margin. Plus, what will happen as we go further, the operating leverage should flow into the operating margin. So a combination of this will help us, also increase our advertisement spend, and we will be plowing back a part of gross margin expansion and value engineering exercise, initiatives.
Understood. So you'll be, at least for this year, you'll be plowing back pretty much all the gross margin expansion into advertising. Is that something that one can expect?
Not all. So I think whatever gross margin expansion, 75 to 80% of that will be redeploying back, both in advertisement, building capabilities, and increasing, frontline infrastructure, sales infrastructure. And some part of it, 25 to 30 bits at least should go back to the operating margin.
Ankush, just one question from my end, and long debated, you would have spoken about it a number of calls, but there is a bit of uptick in rural spends versus urban as per a few studies that have come in. My question is, are you sensing that at Dabur India too? And excuse me if you already covered that, but if not, would love to know.
Yeah. While I think I covered part of it, but we are definitely sensing that. As I said earlier, our rural growth has been almost 350 bips higher than urban, our Dabur India growth this quarter. And also, the syndicated data or rural India as a whole grew 250 bips higher than urban in this quarter, which sequentially has been higher than even previous quarter. So yes, there are green shoots as government is spending much more, infrastructure and capital into rural. So we are definitely witnessing this, and we are also investing, in rural India, plus infrastructure development from our side, more sales team, etc., which is also helping us, generate this higher growth.
Right. So, Ankush, what can one anticipate from the numbers going forward? If we're to extrapolate maybe volume growth for this year, what's the broad expectation that one can have? And given that you'll be plowing back 80% of gross margin benefits into A&P, what can one expect the margin number to look like probably end of this year?
Yeah, so I think I'll break it into two parts.
Yes.
First is, our aspiration definitely is to grow mid to high single digit in terms of volume. Having said that, we are very clear that we want to grow ahead of the category in the respective categories. And like previous quarter also, we have gained even this time in 90% of the product portfolio combination, we have gained market share. So clearly we are going ahead of the category and we want to grow that as well in the future. And therefore we think we should be able to grow mid to high single digit volumes and consequently price increases will be bolt on. Point number one. And second, I think, was on your operating margin. While last year we closed around 19.4% or thereabouts, as we said earlier, part of gross margin expansion we will be redeploying, and some bit of it, 25 to 30% of the gross margin expansion we will be giving it back to the business in terms of operating margin leverage.
Okay. Thanks a lot for that, Ankush. All the best for the quarters ahead. Really appreciate your time.
Thank you so much.
Well,
Thank you so much.
That's Dabur India for you. Devin Choksi with us on the fundamentals as well. Devin Bhai, thanks so much for joining in. As we speak, by the way, Zomato numbers are out, up 18% revenues, and the bottom line expands meaningfully because EBITDA is expanded. It's a hectic day for results. I'll start with one or two of these names. And your view on Zomato. Okay, let's start with that first because it's a meaningful expansion in margins. If you consider the margins that they operate at, from 2.4 to 4.2%, EBITDA more than doubles. Is this business finally coming of age? It's nearly a 2 lakh crore market cap now.
Yes, Niraj. Good afternoon. Well, I think understanding is clear that since they started introducing the platform access fees and they started increasing those fees in subsequent period, I think the revenue numbers are ticking in, the margin numbers are ticking in better, particularly. So that is one point. Second, subject to the details that we get on this result, I think the Blinkit has possibly started breaking even. That was expected. Should this quick commerce part of the activity, I think in Zomato, start breaking even, then probably I think the margin would stand improved going forward as well. Now, if they increase the fee to access the platform further, automatically, I think these numbers are going to be further rising because the per order basis, I think these numbers are going to be increasing. Whether 2 lakh crore worth of market capitalization on this size of business is something which you want to call it expensive, I think I leave it to the street at this point of time. Because my take is that, yes, I think the business is difficult to build, replicate, I understand that part of it. But you are paying a decent amount of price, I think, for that particular proposition. And you never know, I think, how somebody can disrupt this particular business in a shorter while. Like, I think, how the quick commerce is today disrupting, I think, the established players to a greater extent. So such kind of things, I think, are always there as a risk in this business. But my take is that, yes, numbers are improving. And certainly, I think if the excess fees are increased, then probably I think it will further improve from the current levels.
Okay. Well, 1.5% higher. We are showing those QOQ margin upticks there, but the YOY numbers also look very, very robust. So keep that at the back of your mind. We are talking about the energy names today, Deven, and two-part question. One of them is on Adani Enterprises, the numbers and the scheme of arrangements that they've announced. I don't know if you got a chance to go through that, but if you have, what's the view there? And if not, a view on oil upstream and the way these stocks have moved today.
Well, I think I haven't gone through the scheme at this point of time, Niraj, so maybe I think would refrain from putting that point across. But overall, I think the Adani Energy Solution, if you are talking about, I think the demand for the paper is definitely high on the QIP. And that is possibly one of the reasons for which I think the stock is, I think, having a leg up the sharp upside at the current levels. I always believe that I think this particular business has a larger role to play. On one side, completing the capex program, you are basically, and once you enter into the OPEX, the size of the EBITDA is, I think, distinctly large. I think you earn around 90-95% kind of EBITDA margin in the transmission business. So from that particular point of view, yes, I think this is a great business to be, but it demands significantly large amount of capital. I believe that the company is generating large cash today, and I think that is the investing proposition that they are attracting new investors with. So I guess I think the business would continue to offer solid opportunities. Maybe I think in a given situation when the stock prices are corrected, probably I think that's the best time to add further into the portfolios.
Okay. Well, some serious moves there for a clutch of, like I said, it's sounding like a bit of an energy show, but that's what the businesses have done today. Some serious strong moves for a lot of these companies in the session. So certainly something that you want to keep an eye out for. The markets, the fact that there are no breakout stocks today, not too many of them, very few, shows you how there's been a bit of a pullback in the sentiment today. While we may be flattish for the large caps, the mid caps and small caps are anything but flat. And therein lies that small issue thereof. A clutch of stocks have completely come off. By the way, speaking of energy businesses, CESC or Calcutta Electric, something that Kush probably highlighted, is also trading well and truly in the green. So that's doing well for itself. The other bucket which has had a really good run, Devin, in the recent past has been insurance. What a month of July. Nearly 17-18% gains or maybe even more. Now, is that baking in the positives, or would you believe that it's a pocket you might want to consider afresh?
So, having remained invested in the insurance business for such a long period of time, the conviction level is extremely high, Niraj. The current numbers that you are observing, be it in SBI Life or be it with the other life insurance companies in particular, you're finding that I think the amount of growth that they are reporting in collecting the new premium is somewhere around close to 18 to 20%. Now, this is something which is very interesting because when you start acquiring the new customers and when you start collecting, I think, higher amount of premium, what you're doing in the life insurance business is you're creating a book which is for 35, 40, 50 years. And this is where probably I think this company is just score maximum. Initial period, I think whatever the write-off on the expenses side, I think is completed. In subsequent period, I think once size of the book increases, that shows it into the bottom line profit and performance. Typically, what we have understood in the life insurance business, you remain invested for initial periods, and then probably I think once they start materializing into the profit performance, it compounds and the growth I think is significantly higher. So we distinctly remain positive in this business. And maybe the likes of LIC looks, I think, brilliant from the point of view of looking at investment. Also because of the size of the book, also because of the fact that I think the larger size portfolio that they are carrying, also because of the fact that I think this portfolio holds the possibility of regular profit booking and generating significantly large amount of reserves for the investors also, and I think the dividend thereafter. So we remain distinctly positive about, I think, the likes of LIC in the portfolio from the investment perspective.
All right, so positive on LIC. So if I can quickly ask you one more, the auto pack has been in focus. You've got very strong numbers coming in from Maruti especially, M&M as well. Stocks have run up as well quite substantially. What do you believe is the top trend which is playing out, especially in auto, if you believe so? And do you believe valuations are still currently favorable? Can this run last?
So if you minus, I think, the monthly numbers on a month-on-month basis, I think then possibility of, I think, looking at this business in a much larger scale, I think is very high. Also the fact that I think the consumer, the customer is basically having the larger amount of what you call spending power in his hand. And now it is X amount, then probably I think tomorrow it's going to be X plus something or X multiplied by something. That is where I think we are seeing the proposition from the long-term point of view in the auto space currently. Now look at individuals within that. The commercial vehicle is connected largely with the infrastructure, largely with the industry. And given the momentum of spending in that, I think they are direct beneficiary of this particular spending which is happening in the economy. So we remain distinctly positive about the prospects in commercial vehicle. Having said that, in passenger vehicle, likes of Maruti have significantly differentiated strategy along with Tata Motors. Maruti is basically moving towards premiumization in a very systematic manner, which is also getting reflected into the profit performance that this company is reporting. Tata Motors similarly creating a niche with the electric vehicles, and I think significantly ramping up the margins. We want to see the results hereafter, and then probably I think we believe that I think this is one area where any price correction due to any kind of monthly numbers announcement is a meaningful entry to buy into this kind of company. So we remain positive with the outlook of at least next 3 years, I think, which remains absolutely convincing to us.
All right. while we are on auto, both of those majors reported June quarter numbers. Maruti was a beat to street estimates on pretty much all fronts. M&M's revenue and profit disappointed a bit. We caught up with the managements on growth drivers going ahead as well as the quarter gone by. Listen into a slice of that.
On the farm side, it is early days. We did see some green shoots. We laid it out in our earnings presentation, and we are hoping that results in optimistic outlook for the rest of the year. But it is early days. Monsoon distribution was one of the big reasons why second half was so weak last year, and we just have to keep watching that. The north and east are still seeing some stress, and so that's something that that will really determine whether we get more upbeat about the farm sector as we progress through the year. It is a big driver of rural demand for sure, and distribution, if it is good, then it should help. There is an impact of an additional festival this year, which does help the overall industry, and being market leaders, we benefit from that. Share gain is helping. The success of Naya Swaraj that whole strategy has worked out really well, seeing the strength in Punjab, for example. And that's something that does make us optimistic if the headwind of distribution doesn't come in.
So most analysts look at it sequentially. So from Q1 last year to Q1 this year, quarter on quarter, we had about a 30 basis points expansion in margin. And of course, it's always a resultant of several factors. On the positive side, the RM ratio improved, RM to net sales ratio improved by 90 basis points. And that included a reversal of a one-off that had happened in Q4. So the one-off that we had in Q4 got corrected. And of course, there were other benefits like operating income, which went up by about 70 basis points. We had a 30 basis points gain in some manufacturing efficiencies. On the downside, we had some impact in employee cost, in operating deleverage of about 80 basis points, because of volume fall, and some advertisement spend because of the T20 World Cup and the Swift launch of about 30 basis points. So net, there was a 30 basis points margin expansion. And of course, in the raw material to net sales ratio, commodities and Forex did help.
And that's the auto pack really, and how it has done in the session today. Okay, 6 minutes left. Let me get in closing strategies from both our experts. Rajesh, I'll come to you first. Your top closing strategy as the Nifty tries to claw its way back.
Yeah, as we pointed out that, the plus minus 20 point from 25,000 would be the expiry. So I think we are almost around those level for weekly expiry. So Lupin is the stock where we are focusing. Pharma is a space where continuity of uptrend is there. So Lupin can be a BTST trade from here. Target would be 1990 to 2000. Stop loss one can keep around 1925. And the second stock that we like is NTPC. Very strong uptrend is going on in this stock. This is the third consecutive day where stock is making higher high low formation. So NTPC can be buy for BTST point of view. For 435 would be the next target. Stop loss one can keep around 417.
All right, Kush, let me come to you. Closing strategies.
It's a little surprising that the entire hour has passed without the mention of chemical stock.
Oh, yes.
A lot of these names have seen a lot of traction over the last few weeks, and even now some of them are popping up. There's a stock called POCL, Pondy Oxides Limited. Not a trade recommendation just yet because it's already moved up quite a bit in today's session. But any kind of dip should be considered. So just putting it on the radar, not putting it out as a trade yet. For a trade, you could consider Himadri Specialty Chemicals. Very strong volumes. There's been a breakout above that 440 level, which was a resistance for the past month and a half. So here one can consider a fresh entry for targets of 465, 480 in the near term. 430 is a good support zone, so you can keep your stop loss there.
All right. Let me move across to Deven sir. Sir, tell us on the chemicals front. It's a great topic. We've covered it a couple of days back. We've missed it today. Any interesting names that you are finding? Any interesting stories, both in terms of valuation as well as demand recovery, and what's playing out according to you?
So let me spell out what is playing out first. I think given the crude oil prices, and I think the possibility of crude oil prices remaining at a lower end, the derivatives of crude oil prices, which are the intake or the inputs for the commodity companies like chemical companies, they are the ones I think which are the driving factor right now. Because on the other side, I think most of the clientele segments, they are also basically I think having the demand generated from that corner. So demand is strong, the cost is on the lower side, which is reflected into the profit performance of these companies, having seen last 6 to 8 quarters of almost, I think, stagnant or negative performance in some cases. Hereafter, I think the performance promises to be better on the margin front as well. So we remain distinctly positive about the prospects in either in agrochemicals or in specialty chemicals in particular, where I think we believe that the growth rate and the prospects are intact. I think the names of the companies are a couple of them that we track, I think, and where we believe that I think the opportunity basket is becoming larger. But that's a part. I think this is a general view that we believe that I think will help investors, I suppose.
All right. We're very close to close. So I'm going to quickly thank Devin Bhai, Rajesh, as well as Kush for joining us today. Thank you so much, gentlemen, for all of those views and thoughts. But we'll switch back very quickly to where we are closing in at the Nifty 50. If we can pull that up. Well, a fifth of a percent higher, above the 25K mark for the first time. We're closing above that. Hopefully, we close above that. Another minute or so to go in trade. But the historic 25K mark breached. Let's pull up the Nifty mid and the small. The Nifty bank itself up around a tenth of a percent thereabouts. The mid cap and the small cap indices, if we can pull that up, well, not bad at all. 3/4% lower on the mid cap. We've gained after that initial blip that we saw midway through the day. So let's pull up the advanced decline before I move over to the heat map and see which ones have buzzed. Well, robust as ever in favor of the decline. So the breadth of the market still completely weak, as we would call it. We'll have to wait and watch tomorrow where we close the week at. But in terms of specifics, M&M, soft set of numbers, down roughly 3% thereabouts onto the losers. Hero Moto also down around 2% thereabouts. The power pack largely in focus. Power Grid, Coal India, as well as ONGC leading the pack, but HDFC Bank silently has climbed 2% higher and helped the Nifty 50 to breach 25K and hold above it, at least for the moment, just about holding on to 25K. But HDFC likely the candidate which has aided the Nifty today. We'll go on to contributors. Reliance as well, up around 0.8 odd percent. The pharma pack in focus. We had Sun Pharma's earnings coming through 0.5% lower on that one. We also had quite a few other numbers, but we've closed now at these levels just above the 25K mark. So 50 points positive and plenty of good contributories. Let's pull those up and let's talk a little bit about those. HDFC, Reliance combined contributing to nearly half of the positive contributories on the Nifty 50. So that's one key positive. Power Grid was doing very, very well in trade as well today. The entire power pack, in fact. The losers, M&M, Infi, L&T, and ICICI Bank. Those were the top four losers on in terms of points contribution. Let's pull up the sectoral heat map, see which specific sectors took home the most. Of course, the Nifty Energy stood out in trade today. No surprises there. But you're seeing good traction in PSUs as well as infra. At least in trade today, we saw, in fact, media and realty, the top sectoral losers in trade. PSU Bank, surprisingly, despite the Nifty PSU index being higher, the Nifty PSU Bank was around 1% or thereabouts lower. Nifty Auto too took a bit of a beating. Now, mind you, good number of auto companies have come out with their July numbers, and the auto stocks will continue to be in focus on the back of that. Now that we've moved past M&M and Maruti, the two heavyweights who have come out with numbers. But let's pull up the BSE 500, mark out a few individual names which have done well. Jubilant Pharma up 11.5%. First Source Solutions along with the whole Goenka group has done very, very well in trade today. CESC also among those, PCBL also among those. So all of those have done very, very well. Let's look at some names which have not done so well. Sonata Software, soft margins. TeamLease, margin decline. Birla Soft continues to be down almost 5% in trade today. Aegis Logistics and KRBL also among the top losers. But with that, we are out of time on this edition of India Market Close. Thanks so much for tuning in. From Niraj, myself, everyone who puts the show together, thanks so much for watching.
Hello and welcome to NDTV Profit. You're watching IPO Adda and my guest today is from Unicommerce E-Solutions. The company's IPO is opening on August 6 and closes on August 8. Price between 102 to 108 rupees per share. It is an OFS of 276.6 crores and the company is valued at a little over 1100 crores at the upper end of the price band. And joining me today is Kunal Bahl, who is the promoter and non-executive director of the company, and Kapil Makhija, who is the MD and CEO of the company. To start off with, Kunal, you're coming out with an OFS. It's an emerging company and you are in a growth phase as well and you're profitable as well. But why are you not raising a growth capital or in primary issue?
Firstly, thanks for having us, Ajit. It's a pleasure being here with you. Look, the company is profitable and has been profitable for many years and also has a lot of cash on the balance sheet. So currently it didn't warrant us to raise any primary capital currently. However, in the future we may explore doing so. But for now, doing an OFS, getting listed was the priority.
Give us a sense of the business plan and business model of this company, because you are into providing e-commerce solutions as a service. How does it work for our viewers?
I'll take that. First of all, thanks for having me here. So essentially, we in the e-commerce value chain, as a consumer, when you're ordering, you see the interface on which you're placing your order, and you see the delivery boy that's getting the item to your doorstep. Whatever happens in between, we are powering that entire journey. We are this invisible force behind the entire e-commerce backend to make sure that everything happens seamlessly right from the time the order is placed till the time the item is delivered. We are the largest player in this transaction processing layer, which is this invisible backend that I was referring to. We have, in terms of our business model, we are charging our clients basis the number of transactions that they process on the platform. So as the number of transactions grow in the country and on our platform, the revenue continues to increase. We serve a very diversified base of very marquee clients, both in India and international markets. We serve digital first brands, the likes of Mamaearth, Lenskart. We serve offline first brands, the likes of TCNS, Paragon, and also marketplaces such as PharmEasy and logistics players such as ExpressB. So we have a fairly diversified base of clients and catering to multiple categories as well as varying scale. The platform is flexible to work with a large enterprise which may be processing millions of orders to a small SME which is processing only a few hundred orders a month. The platform has also been around for more than a decade, so we have built a very comprehensive product suite to be able to cater to wide variety of use cases and is deeply integrated into the technology stack of a seller. That's why we have very long-term relationships with this customer base and gives us the ability to further cross-sell other offerings. So we continue to be a backbone for the entire e-commerce, and we are ensuring that we're shielding the entire complexity for the brand. Our motto is to simplify e-commerce selling, and that's what our platform does to enable or free up the brand to focus on their brand and their customers, and the entire complexity behind the backend is taken care of by this solution.
Basically, so you bringing the digital experience between ordering to delivery. Basically, that's what it means. Kunal, give us a sense of how this in unique space is growing. You are a veteran in the e-commerce space. In terms of volumes, how have you seen the volumes growing, and are you seeing a trend of more and more online transactions going through as we speak?
Yes, Ajit. I'm now a grey-haired person in this e-commerce industry, and having started, more than well over a decade back, and every year since my journey started in e-commerce, everyone has always said, this won't work, that won't work. I remember in the early days, people used to say, no one will buy anything online. Then they started buying mobile phones. And then people said, okay, it's a standard product, but people will never buy fashion online. And then people started buying clothes online. And they said, oh, they'll buy fashion because they can get it fixed from a nearby tailor, but they'll never buy shoes online. Then people started buying shoes. And then people said, oh, but they will never buy beauty online or pharmacy products online or food online. And we have seen how that has played out. One thing is very clear, that in India, e-commerce will continue to grow. And the long-term landscape for e-commerce is extremely vibrant. To put it in context, right now, there are probably 4 or 5 billion shipments, e-commerce shipments that are happening in India every year. In China this year, this number will be about 150 billion shipments. So there is so much headroom left to grow in India that is almost mind-boggling. And as these volumes of e-commerce in India grow, the level of complexity that a brand or an SMB, a small seller in Surat has to face is also increasing very dramatically. And this is really where Unicommerce comes in, where, as Kapil rightly said, if you're selling on 5 marketplaces, you're working with 5 logistics partners, you have maybe a small ERP also installed, you have to do payment reconciliation. It is very complicated for an e-commerce brand to run an online business these days. Gone are the days where it was 2 marketplaces